Howdy folks, Blake Jordan here with Pratt Homes. Today we're going to be talking about conforming loans. Now, what is a conforming loan, you may ask? Well, simply put, a conforming loan is a loan that it's going to adhere to a few different rules by a few different agencies. One of the major rules is going to be maximum loan amount. So the Federal Financing Housing Agency is going to piggyback off of a rule by the Housing Pricing Index that is going to be very location specific for the maximum loan amount that these loans can adhere to before going to what's called a jumbo loan. In most cases, it's well above $700,000, so don't worry, you're covered. Number two is going to be, think of it as a rule book set aside by, I call them the mommy and daddy of loans, Fannie Mae and Freddie Mac. Now, these agencies are actually going to insure these loans, so in order for these loans to get that insurance, they've got to adhere to what mommy and daddy have to say. Think of it as things like underwriting conditions, income requirements, and things like debt-to-income ratios. As long as they adhere to all of these conditions, they can be considered a conforming loan. Now, these loans are going to be in several different categories on really terms you've probably heard of. It's going to be things like Federal Housing Administration loans or FHA loans. You're going to have Veterans Administration loans, or commonly referred to VA loans. You're also going to have the U.S. Department of Agriculture loans, or USDA, and also what's called just a conventional loan, a simple conventional loan. All of these loans are going to be considered conforming loans. Now, why does this information even matter to you as a buyer? Well, there are several key advantages that you on your end are very important to know. One, conforming loans are going to have the lowest interest rates in the market today. Each one of these loan styles have advantages, and lowest interest rates are going to be one of the key advantages. Number two is down payment requirements. Each one of these loans, as are they a little different on requirements, are still the lowest down payments in the industry. You're going to have 0% with VA loans, 3.5% with FHA loans, and 5% with conventional loans. Now, keep in mind, though, that you can use your land for down payment on each one of these loan styles. So technically, you could actually buy a home with no money down. And third is going to be maximizing your spending power. So each one of these loans are going to have a higher what's called debt-to-income ratio allowance than most other loans in the industry. So they're going to allow you to stretch out your income to purchase more home for your money. Now again, remember folks, at Pratt Homes, our knowledge is your power.